Hello and good morning out there. My name is Michael Duke, and this is the show where I analyze stocks that are interesting, among other things. So if you find that interesting, then please consider liking this video and subscribing to the channel. We're going to do a quick video today about a company I've covered previously, McCormick and Company Incorporated. It's quite the tongue twister. Ticker MKC. McCormick, very early this morning, released their earnings report, and pretty middling results. The stock's a bit down on the day, but we're going to take a look at how the company has performed. I'm going to discuss why I still like this company despite really a very premium valuation. And we're going to take a look at the earnings, the performance of the stock price, and the underlying business performance as well. So let's get into it. So first off, let's just go with the Seeking Alpha review here. The company missed earnings slightly, hit revenue. You see here our numbers here, pretty tepid. Revenue grew by 0.6% year over year, in line with estimates. Volume grew by 2%, but there were currency headwinds of 2%. You had organic sales growth of 2%, driven again by the volume increase. And guidance was reaffirmed. So the company expects net sales growth 0 to 2%, operating income to grow 3 to 5%, and correspondingly adjusted operating income, earnings per share growth of 2 to 4%, and then adjusted earnings per share of 3 to 5%, with slightly better numbers in constant currency. Just a few comments here. Gross margin expansion partially offset by investments in SG&A. And then we have some currency headwinds here. Mid-teens year-over-year decline in income from unconsolidated operations due to U.S. dollar strengthening versus Mexican peso. One thing to watch out for that I've talked about before, but I'll mention again, is that it is clear that for the Trump administration to hit their policy goals, a weaker dollar is required. So look for further downward pressure on the dollar. And, we can take a look at the dollar index and see that the dollar has, in fact, weakened in recent months. So something to consider. Let's take a look at the website so we can take a look more closely at our earnings report. They got a nice breakdown here of what's driving sales. Let's look at our slides here. It's just going to be quick. We're not going to spend too much time. There is our CEO, Brendan Foley. Okay, so as stated prior, organic sales growth of 2% driven by volume. You see here many brands that you might recognize: McCormick Spices, French's, Mustard, and others. Frank's Red Hot, Zatarain's, Cholula, Thai Kitchen, and some other ones that I'm not familiar with. Okay. So areas of success: positive unit share and distribution gains in hot sauce in the US. Recovery in China business gradually progressing as planned. And then we also have share gains in alcoholic and non-alcoholic beverages. Areas of pressure: flavor solutions. You had CPG customers' volume softness in Americas and Europe and the Middle East and Africa. Interesting to note here: slowdown in food service food traffic impacting America's branded food service performance. Really, the main thing I want to highlight here is you see these numbers. They're nothing to get too excited about. I mean, we got low single digit growth in sales. Okay. I mean, inflation is the most recent CPI print was 2.9%. So our top line is across the consolidated entity, not even keeping up with inflation. And then we see, kind of across regions here, flavor solutions being a high point. And then we have our net sales gross profit being, it says here, 37% gross profits, really strong gross profit margins. So we had a decrease in profits, and we're talking about adjusted net income here. So a 4% decrease versus the prior year's quarter. And then we also had the consumer segment was way down, but the flavor solutions way up here, albeit with lower operating margins. So here's the prior year, and here is the current year's quarter. So what I want to talk about here is that this company is a cash cow, has very strong gross margins. It's just plain and simple consumer staples. Big piece that we've talked about a lot on the channel is consumer staples are highly attractive to me right now and have been for some time, given their relative value compared to the index at large being driven by tech. That being said, this company is trading at a expensive valuation and has tepid growth. They're guiding to a profit growth that is very modest, if not low. Again, it's not going to blow you out of the water. I look at these numbers, I'm very underwhelmed. However, here is the reason that I like this company. And it's there's got to be a term for this. There's got to be a term for the way that I would discuss it. Now, of course, on the channel, we're focusing on the fundamentals of the company. But another thing that we focus on is performance and momentum of the actual stock, which can be wildly disconnected from the fundamentals. I'm not suggesting that that's what's happening with this particular company. However, one thing that I do really like about this company is how strongly it has performed over time. And what I mean by that is just look at this chart. Okay, this is total return of McCormick, total return of the S&P over the last year. We see that this company has grown barely. It's basically the same company today in terms of financial performance as it was a year ago. However, what we're seeing here is one, it has outperformed the index on a total return basis, which is awesome. Another thing that we're seeing here is the degree to which it outperforms and under which circumstance. What do you notice about the chart? I'll tell you what I notice. And it's not perfect, but what I notice is that in periods of index weakness, like you see here in April of last year, at one point, the S&P was down roughly 5%. You see this was a strong earnings report of which the stock jumped about 10%, which no doubt had to do with this performance here. But you see, we had some positive correlation here. The stock traded down with the index. However, we kind of moved a little inverse here. And what do we see here? While the index was trading down, this stock was trading up. Happened to reverse itself here, so on and so forth. This and the index traded down here. However, since mid-January, McCormick has significantly outperformed, and we see that borne out in these results. We know that February, the week of February 19th, that's kind of when the S&P entered into roughly a 10% drawdown, of which it is currently recovering from. Over that time frame, McCormick has done fairly well. I think if we go a month out, we see that performance borne out. Now, of course, we see the S&P 500 outperforming slightly in that time. And this is going back to February 25th. If I go back a little bit more to the period I'm discussing, that is kind of what I'm talking about. There is nothing fundamental about this analysis. In fact, there's not even really anything technical about it. It's more just visual. I've done this type of analysis before on the channel. I actually find that this analysis yields great results. What I'm seeing when I look at this company is it has the potential to provide a modest amount of diversification. Now, of course, we see here that wasn't really the case. That wasn't really the case in this time frame. It traded down with the market and just simply didn't recover quite like the market did. In fact, the company has performed very poorly over the last 5-ish years, which has really hampered its prior significant outperformance versus the index that we see here. But again, if I zoom in, what I like about the company, it was very strong here where the index was not, and then it entered underperformance. What I like about this company is that it provides a modest level of intraday diversification versus the index and a very strong Modi underlying business. Another reason that I like the company continued is that if we compare it to some of our other picks in consumer staples, Hershey's, Pepsi, we haven't done a video on Pepsi. Maybe we need to. It's in the portfolio, but small position, about the same size as McCormick, actually, position wise. But yes, still small position. And then our other staples pick is Flowers Foods that we've discussed. So if we take a look here at this chart, out of these four companies, McCormick has only been outdone by Pepsi over the 3-year time frame. Over the 5-year time frame, McCormick has been middling in the pack. However, if we kind of zoom in a little bit over the year time frame, we see that for some reason, and maybe it owes to this. Actually, it owes to this particular day. In fact, maybe what we need to do is let's go to the 1st of April. Okay, it still holds. So again, I'm trying to make the data a little bit less noisy because this earnings report that we had today, a year ago, the price spiked by 10%. And that's, while that actually happened and that's true performance, that is somewhat jading what the point I'm trying to make, although it is still relevant and we will look at it again. But we see here that over the last year, the stock has significantly outperformed our peer group. Now, it's a much different business with different products than each of these businesses. However, you do see they do have a modest level of correlation. Each of these consumer staple stocks is more correlated with each other than the index at large. And you can see that borne out in the trading pattern that they exhibit there. I just call it a visual analysis. The purpose of the visual analysis is correlation. Without actually calculating the correlation coefficient, without actually calculating the beta, we are making the process simpler and easier for the video format and also it for ourselves when we're doing our analysis. If I look at a chart, as long as I understand how to eliminate some of the noise, you can start to treat out how correlated things are. What I'm seeing here is that McCormick has that consumer staples beta that I want. I want to pick up that correlation in the sector because it's undervalued, in my opinion, relative to the index. However, what we're seeing is that for some reason, a reason that is unclear based on looking at this data, but for some reason, McCormick has been highly favored by the market versus our other liked stocks, Hershey, Pepsi, Flowers Foods, among others. And then, of course, if you include that earnings report over the year timeframe, has outperformed the index. So from that standpoint, what I'm looking at is I'm very much not impressed by the performance. It's within their guidance, so I'm not disappointed by it because I expected it more or less. I've expected, as all investors have, fairly tepid performance, and I'm not going to go into why because I've discussed that before, and the outlook has not changed. But there's nothing overly impressive about the business performance. However, the market has definitely liked the company over the last year, and the company has outperformed the market year to date. In fact, only Hershey has outperformed the market in addition to McCormick year to date, and very slight, still down on the year. These other two stocks have, significantly underperformed the index. Now, the allure of the sector for me that I've discussed before is that the thesis, among other things, is that these stocks will outperform the index in periods of weakness. So when you look and I see what has occurred just in the last quarter, the year to date numbers, what I see is relative strength in this company, and that alone is reason to like it, given that I like staples, and this company appears to be best in breed out of the four that I cover in my universe so far. I'm not really sure why the market likes this stock so much compared to the others. I'm really not sure why. I think if I had to guess, it's because international sales might be more robust. Therefore, some of the things that have been weighing on the sector, such as Robert F. Kennedy Jr., you saw today or yesterday discussion about a leak, a news story about him pressuring these companies or outright banning food dyes, artificial food dyes in food. Perhaps the market perceives McCormick and Company being more insulated from that, given their products. Perhaps they have better gross margins than those other companies do. The list goes on. I implore my viewers to investigate that. All I wanted to discuss is that this company, it's just kind of chugging along. Again, very strong gross margins, indicative of their moat. And they have some interesting things going on, marketing strategies, so on and so forth. The idea is that this company is, it's just been a champ of a performer that's fallen off in recent years, but has exhibited strong performance over the last year. And while its earnings growth may not be as robust as the index, the market certainly is looking at this company as it is more of a safe haven than the index as a whole. And for that reason alone, it deserves a place in my portfolio. And if you are a more defensive oriented investor, as I am, then perhaps it might appeal to you as well. However, you see here that the PE ratio still very expensive due to just a lack of growth. So I think there's a lot to like about the company. I'm not overly impressed by their financial performance, but I'm reassured that we're on track with the goal here. I don't really see any red flags. They're within their guidance, this very narrow band of what they're guiding to. So I'm going to continue to monitor. I wouldn't necessarily say that it's a strong report. However, for whatever reason, the market likes the stock, and I do too. And maybe we all share the same views. So let me know what you think about McCormick and Company. Kind of a brand portfolio that flies under the radar. It's not sexy. It's not AI. It's not. We covered all this before. It's a company that I believe will be around for a long, long time, and that makes it relatively safe. I think that's where the premium pricing is coming from, is that in a world full of lots of tech disruption and emergent industries right now, this company is kind of a bastion of stability and a very stable and safe base of cash flow for investors to get. However, you will pay up for it. This is not a cheap stock. In fact, there's some tech stocks that are less expensive than this stock. But I think that the reasoning is just the stability of the cash flow. So, anyways, hopefully you found this useful and instructive and interesting. And let me know what you think. If you want me to take a look at other things, again, I'm discussing this just because we're looking at the earnings and just breaking that down, taking a look at where we're at. I'm very pleased with this, the performance of this stock. I have a much bigger position in Hershey because Hershey has just looked like a much better value. However, Hershey is dealing with these very strong headwinds. Meanwhile, McCormick is just kind of chugging through, also facing headwinds, some of the same headwinds, but a lot more straight and narrow of a path. So I'm very pleased with the performance. and have a small position, like a 1%, a little bit more than 1% position in this. Um, Very small allocation, because it's been hard to really get on board with putting a lot of capital into it because of the price and because there's not a lot to get excited about. But perhaps that's the point. So I continue to like this. I continue to like the company, and we see it continues to be in this modest uptrend here, and we're kind of in the middle ground here. So I wouldn't say that it's a pound the fist on the table buy where it is now, but given the fact that it does appear to be in this very, very modest uptrend, that it's worth accumulating if you're looking for defensive properties. That's just my opinion, and it's not a recommendation. It's not financial advice, of course. But, anyways, hopefully you found this interesting and fascinating, as I do. Please check me out on Seeking Alpha. This is an article I wrote. It actually has, since I wrote the article, December 10th, 2024, has outperformed. So follow me on Seeking Alpha, where I post a lot of the things that I've discussed. You see here, a lot of the things that I've discussed on the channel, I've also written articles about. My articles are a little bit more well articulated, and frankly, they are probably easier to follow than me rambling in front of the camera. So please feel free to follow me, engage with me on there. Would love to hear from you. If you're not a premium subscriber, which you need to be to read the articles fully, I have a link in the comments and in the description where you can get a $30 off a premium membership or a pro membership. So, anyways, yeah, please continue to engage with me. I appreciate all my viewers. Hopefully, you're still out there watching, and I will talk to you tomorrow. All right. Thank you, and have a good day.